everybody. It's actually here. Oh! Welcome back to Strongman Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term boglehead investor. I'm author of the book, Stop Being a Broke Loser. It's on Amazon. Go buy it so I can get rich and grift off my fan base. And I'm a hater of Meat Spin Kevin. Now, in this video, sent to me by a loyal fan, and I appreciate you. Keep sending those videos, buddy. You know who you are. Meat Spin Kevin apologizes for Cathie Wood. Oh my God, she's so amazing. Meat Dick Kevin apologizes for Cathie Wood's underperformance because her portfolio is all about the future, bro. And when you buy futuristic stocks, their cash flows, their projected future cash flows are way out in the future. And when interest rates go up, because you got inflation, when interest rates go up, you got to increase your discount rate. And when you do that, those future cash flows, discounted to the present, get smaller and smaller and smaller. So let's see what Meat Breath Kevin has to say and how he apologized. Oh, Cathie Wood, you just don't understand her, everybody. Cathie Wood's amazing. I basically just copy the stocks that she buys, and I talk about them on my channel, and I dye my hair stupid colors, because I'm a loser and a troll doll, and that makes me a genius. Don't forget to buy my course, bro. So let's watch this video where Meat Spin Kevin explains discounted cash flow, which I'm sure he freaking Googled right before this video. And then he apologizes to Cathie Woods. And Cathie Wood, not Woods. I'm going to give my commentary on old Meat Breath.
We're going to do our discounted cash flow models, which discounted cash flow does two things. What? It takes into account a discount rate, and it takes into account future cash flow. But the problem is, if you reduce the value of future cash flow on companies that already have very little future cash flow, then the present value, the PV of the companies, is going to look a lot less. And so she makes the...
Okay. What he's saying is, and he's explained it horribly, companies that are growth companies, their earnings are going to be way in the future. They may become giants of industry. They may be the next Apple or Amazon. But their earnings are years and years and years and years into the future. So if you buy this stock, or one of Cathie Wood's stocks, you're going to have to wait for years and years and years as an owner of one of those shares to get a cash flow. And the more time that has passed, the higher your opportunity cost. That's why when you do a discounted cash flow analysis, the further out the earnings are, the less their present value is. As a matter of fact, let's go look at a present value table, and I'm going to show you what I'm talking about. I'm sure Meat Breath Kevin understands this. So here, and I know this is boring, we're going to get right back to Meat Spin, don't worry. Here's a present value table. So let's say you're trying to do a discounted cash flow analysis, all right? And you want to say, oh, how much is this stock worth today? Well, you basically guess how much cash flow the company's going to produce. Could be earnings, could be free cash flow, could be, whatever you want to freaking use. And you say, okay, I think the company's going to make this amount in 5 years. And I want a 10% return on that cash flow 5 years into the future. So what you would do is you look here at the present value of $1 and you say, okay, 5 periods, we'll say that's 5 years, 5 periods, girls, and we'll go over to 10%. So that future cash flow, let's say you're going to make you think the company's going to make $100,000 and you own the entire company. You would take that $100,000 and multiply it by this discount factor. And that would give you the present value of that cash flow. So really that $100,000 that you're going to get 5 years in the future, you multiply it by 0.6209, it's really worth $62,000, okay? That's kind of what you're doing with discounted cash flow. You're taking each year, so your cash flow a year from now, you multiply it by 0.909. The next cash flow, 0.8264, multiply it by that, blah, 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 all the way out. You add up all those cash flows, and boom, you got your discounted cash flow analysis. That's all he's freaking doing. Well, I don't think Meat Breath does that, but that's a discounted cash flow analysis, all right? It's really not that crazy complicated. You just kind of have to understand the concept behind it. So here's Meat Breath explaining discounted cash flow. Now, let's see what he has to say about Cathie Wood in the future, bro.
This argument here that companies, investment companies, are unfairly ignoring the fact that there are companies that are aggressively positioned for massive growth that, yes, sacrifice short-term profitability, but in doing so, let them take advantage of massive growth opportunities because they're investing now into what they know will be bigger growth rather than here more dividends or here's, whatever, here's some stock buybacks or whatever. They're investing in what they know or expect is going to make big money in the future.
They know it's going to be big money in the future, bro. Like a Tesla. So basically, here's Meatspin apologizing. Cathie Wood doesn't invest based on profitability. It's as simple as this, okay? Find company that is futuristic and has revenue growth or the potential to have revenue growth and buy it. It doesn't matter if it's going to be unprofitable for 10, 15, 20 years or perhaps go out of business altogether. It doesn't matter, bro. Just buy the company, talk about the future, pump it up, talk about disruptive innovation, and boom, there you go. That's your ETF. At the end of the day, ladies and gentlemen, a stock's price is the present value of all the future cash flows. That's it. So if you buy a stock that isn't producing cash flows, or it has cash flows way out in the future, and interest rates go up, and discount rates go up, that stock price is going to get hammered more and more and more and more. That's all it is, ladies and gentlemen. That is investing, okay? You're going to have these brief stretches of time where growth outperforms. It's the future, bro. Just buy the stock even though it's not profitable. That's going to happen, okay? But in the long run, I think value is the way to go if you want to buy individual stocks. But here's Meat Breath here, apologizing for Cathie Wood because she buys the future. And I see Charmander back there. Hey, Charmander, just open your mouth, shoot some flame out, and burn him to a cinder. All right, let's keep watching Meat Breath.
And this, in addition to this inflation narrative, which he doesn't necessarily agree with, is giving reason to investors to tax loss harvest the innovation sector, leading the innovation sector to sell off more.
Yeah, it's not because those are massively speculative, unprofitable companies that Cathie Wood's investing in. No! It's the inflation narrative, ladies and gentlemen. It's the evil, nasty bankers. They're screwing over Cathie Wood. It's a conspiracy. It's the inflation narrative and tax loss harvesting. Like Jeremy LaFufu with Corsair. It's all that stuff that's hurting her stocks. It's not the fact that she bought a bunch of unprofitable, futuristic, future bro companies. And she became famous during a crazy bull market where a bunch of clowns got stimmy checks, from the government. They just printed money. Print that money, bro. Just print the money, bro. And everybody dived into the market, and the market freaking skyrocketed. That's not why she made a lot of money, bro. It's just because she's a genius. That's what Meat Breath thinks.
Right? In addition, I've also kind of touched on this. She believes that algorithms are doing 70% of the trading, and because of the formulas that we just talked about, are automatically crushing these sorts of stocks. In fact, she mentions during March and April, the big strategies during March and April of 2020 were look for companies that have a lot of cash on their balance sheet and then calculate their cash burn. In other words, this was very, very common. I remember this stuff. I mean, this is crazy, and not that it was really long ago, but I remember doing even these type.
Back in the day, I remember these calculations. All right, so he's going to go into other stupid BS, but I want you to understand the point of this whole video. If you buy a bunch of speculative growth stocks, there is always going to be a reckoning, okay? Because they're speculative. Their profits are in the future. You could be right, but you could also be terribly freaking wrong. And what happens is stocks like that, during any kind of inflationary period or bear market, get freaking annihilated. That's what's happening to Cathie Wood's fund. All right, let's go look at some of the stoinks. Tesla, Roku, Teladoc, Zoom. Oh, that's a pandemic stock. Coinbase, really? Cryptocurrency? Unity, I've expressed my opinion on Unity. Spotify, I haven't looked at Spotify, but if Cathie Wood bought it, it's probably freaking trash. And some other companies I don't recognize. But, I mean, at the end of the day, God, 7.5% or more of this portfolio is in La Tesla, which is freaking massively overvalued, okay? So, the fund, over the past 6 months, it basically skyrocketed, and then it's crashed, like, what, 30%, 40%? This was bound to happen, okay? These speculative manias don't last forever. And clowns like MeatSpin, who benefit from those manias, they don't last forever either. The only reason this clown's still around right now is because of Tesla. The only freaking reason. Tesla, just crash. Please. Please just crash. Please. Just get rid of these freaking losers. But yeah, that's me, Breath, apologizing for Cathie Wood. It's the future, bro. Just buy the future, bro. Doesn't matter, bro. Even though you might, pick one stock out of 100 that is good, you're still going to get annihilated 99% of the time. It doesn't matter, bro. Meat Breath. At least he understands discounted cash flow a little bit. I think he understands it better than Jeremy LaFufu. So I'll give MeatSpin credit, MeatSpin credit for that. But anyway, he's still a freaking loser. That's it. Like, subscribe. Don't apologize for Cathie Wood. And you'll have a wonderful night. Cheers!